Hey traders, it's Sunday night, 9:44 p.m. and I wasn't going to make a video, but next week probably a little bit light on trading just because of what happens next week. But these trades are from Friday that I'm going to show you, and there was no news to worry about on Friday. But I just want to cover up what's coming up this week and why it might be a very light week in trading. Tomorrow, Monday, July 2nd, it's a bank holiday here in Canada. It's a long weekend here in Canada. It's Canada Day. Much like your July 4th. So it's a Canada Day holiday, so a lot of Canadians are probably staying away from trading, that's for sure. On July 3rd, there's really no news to really worry about. We got factory orders in the U.S. coming out, but that's not really much to write home about. It's orange. If it was red, it'd be a little bit different. Wednesday, July 4th. You don't know what that means, right? From the U.S., it's July 4th. Big day for you guys down there in the United States. And what do we have on Thursday? A lot of red stuff here. We got the ADP non-farm employment change. Don't confuse that with the non-farm payrolls. ADP is the that payroll processing place. So this, it's a red rate report. It can move the market, but it's not as big as the one coming up on Friday. Have a ECB press conference for Euro. We all know what's going on in the Eurozone and unemployment claims. So red rate reports off 8:30 at 10 o'clock. USD, the ISM non-manufacturing. And this is all already with a pretty slow week for trading. And Friday, we have a few more. We have the USD non-farm employment change is the big one that a lot of traders look for, and then the unemployment rate comes out, and then here's some red stuff for Canada. That's just the coming week. There's a good chance if you're gonna be trading this week coming. Just be careful. Could be a little bit light on the volume. So I'm just going to cover some trades that took on Friday, and you know that it's very difficult for me to record during the live trading. So what I've been doing lately is just taking screen caps, and it's great because I get to go back and explain a lot better. And I know quite a few people have emailed me and really appreciate that because I do get a chance to talk a bit more about it. Of course, I don't want to go too far into it because that's just not fair to the people who purchased the course access for Dow Scalper at dowscalper.com. Okay, so let me just bring up some charts here and you can take a look. Okay, so this is going to be the Friday, and I just want to show you where we don't start until obviously the start time is 9:30, and actually the way the way NinjaTrader works is this candle right here is actually a 9:30 candle. What that means is it closes at 9:30. Now the market opens at 9:30, so I don't worry about that candle. It's this candle right here. This is the 9:31 candle, closed at 9:31, so it already has the first minute of trading. Okay, and what you can obviously clearly see here is we have I marked off just the high coming into the trading session right here, and when the market opens, it's opening right up into that level right there. All right, breakout traders, you guys got eaten alive right here. The ones that just just go and take breakout trades for no rhyme or reason, just because they're breakout traders. You got bit, you got taken, and you got taken out. Obviously, you got stopped out. No, breakout trades do work. It all depends on certain factors I obviously can't cover in this video right here. So you guys got taken in and got taken out, breakout traders, and you guys lost. But what does this usually mean? You got a rejection of this high right here. What does that usually mean? Oh, this is the open, okay? So it's a lot of volatility right at the open. But this is always a good sign, because what happens, these orders that have been up here, what happens to them that were sitting here since this high right, whoops, I'm going to move the whole chart. Since that high formed, there we go. Let me just straighten this out a little bit. We got a bit messed up here. Just give me 1 second. There we go. Sorry about that. We had some technical issues with the charts here. There we go. All right, that works out better. Okay, where was I? I was talking about the high. Now, what usually happens is you're looking for clearing out of orders that clearly have been placed above there. Now, traders, obviously they noticed this area right here, right? What usually happens, it's a great area to go long at if it breaks. Well, that's what happens to breakout shares like right here. And like I was saying before I got cut off here, that, you know, breakout trading can work, but there's a few different variables that you want to make sure are in place. And I do take breakout trades, but it's all contextual, right? It's not black box. It's not A plus B equals C when it comes to this kind of trading. But since we had this rejection up here, and then you see what we have coming in through here, we have these candlesticks right here. Indecision candle right here. You can see that the bulls try to take it to town here, traded this down this low, came up this high, and eventually closed, which is great. So, you know, the bulls and bears went to battle here, and you clearly see who won that, right? It's still closed lower than the open. You have this candlestick coming in right here. Even though it closes green, you can still see just because of this wick that's right here. Now this is pretty much of a sideways action right here. So when you're looking at sideways actions, you know, these candlesticks, they're not as I want to use the word powerful, but it's not the right word. I can't find the word I'm looking for. But they're not as great as they are when you're looking at reversals and trends, et cetera, when they're appearing in this kind of context. Just be sharp. Just be sharp. That's all I can say. Then we had the other candle come in right here. Right, we had the bulls trying to take it higher again. They managed to take it high, but then look where it closes, down here again. So you know who's in charge, right? You have this rejection here. Who's in charge? The sell-off, right? The bears. They're looking for battle. So my first trade is just after 9:30. There's no trade on this green candle. Obviously, you're looking to see what happens with this candle right here, which is going to signify that who's coming into the market. Right, the bears. You can see how even though it's a long ranging candle right here, it's a long range from high to low, you can still see where it closed. This line right here at 12719, this represents the short trade. I screen capped this just before it hits the profit target at I think it's 11 right there. You can see right through here, it tells you up 7, 3 contracts. So the short is right here, and as you see, it just pops right down to the on this one candle, finishes off the trade right there. So this was a quick +8, and it was nice because it ends very, very quickly, and that's what you want to see, right? When you're scalping, you want to be in and out of the market. All right, so let's go into trade number 2, and that's going to be it for the trading. Okay, so let me just grab the chart for number 2, walk through anything that's important on there, and then we'll call it. All right. Here is the second trade. You can hear fireworks in the background here. Here's the second trade right here, and here's that candle that I showed you leading into taking my profit out. You see what happens here, right? What do you notice here for price action traders and traders that are more in tune with market mechanics than they are indicators? What do they see here? They see a support level, and you see the price did have a reaction off the support level. Trade's already closed, but it has a reaction off this. Okay, so let's move this here. So what do we have? We have some nice momentums going on, right? We have that one trade that works out quite nicely on a short. Looking at this candle right here, momentum starts picking up steam. This trade is at 12707. What's great is what's below 12707. Psychological levels, right? These round numbers they're huge. They're huge, and that's right in this area right here. And it so happens it kind of lines up with this this area right here, which is kind of nice, but it's neither here nor there. So generally what's going to happen is price is going to gravitate to that, and what's usually under those round levels, are orders. All right, so what happens here, the profit target is at 12699. If you have your trades, if you have your charts and you have your data stream for the Dow E-mini, you'll notice that what's going to happen is the market's going to come down, and it's going to come 1 point below 12699. It's going to come to 12688, which takes me out of my trade for another +8. See when I took this +5 right there. And then what happens after it does that? After it clears out, what happens? The market rallies up after this, and you can actually see price is going to come down to that level right here. It's going to come into here. That's a lousy line. It's going to come into here, and it's going to rally off of that. So 2 quick trades, and these were actually just playing the momentum, playing the rejection up here. What occurs here? We have the break of this level right here, coming close to that, right here, as price comes into this level, right? Price likes to gravitate to areas of support and resistance, because what's usually at support and resistance is orders. That's what's usually based there, right? We need some sort of reference, right? Traders need some sort of reference to take trades, unless of course you're just using indicators, which they'll have you taking trades all over the map. All right, so that's it. If someone's to say, well, what can I take out of this? Well, what you can take out of this is, here's that level right there. Here's this level going into the 930 open on this candle here. This is where 930 starts when this candle closes. This candle here ends at 931, so it's the first minute of trading. So what can you see here? We have a resistance level, we have a support level. What does price do up here? It comes up here, clears out some orders, comes back down here. What's it do? Takes out some orders, and what does it do after that? It rallies. It just rallies and just starts going up this direction. And this happens day in and day out. Not exactly like this, right? Because every trading day is totally different. Every trade, every setup has its own unique characteristics. There's always different things behind price movements, right? Yes, it's buying and selling, but there's different factors that are causing that to happen. So people that are just trading, price patterns, etc., etc. In theory, they work, right? But like I said, every day is a different day in trading. So that's it. 2 quick trades. It was done by about 940-ish and change, 940, 941. Actually, this candle's coming down and it's hitting the 941 area. So I think it was about 941. So 11 minutes with the trading. Didn't get any trades until this area back here. Oops. Didn't get any trades until this area back here. And once price did what it was doing, so I had no idea. There's no direction here. There's nothing you can really take from this. You can look at this, what happened in this minute. This is what happened, but there was really no reason to take a trade at that candle. There's no reason for it. Anyhow, let's wrap this video up. And if you're trading this coming week, watch your risk, protect yourself. Thanks.